Hey guys, welcome back. In this video, I'm just going to talk about why I'm scaling back into my investments into FZROX, which is Fidelity's zero cost total US stock market index. As you can see, this is my Fidelity account, so it's a little old, with these positions. I have MAC, MO, PEI, and SPG. These positions are I don't know how else to explain it. I'm gonna get rid of them. I'm just waiting for them to basically try and recover or see where they go, and then I'll sell them off. So I already took a loss earlier in the year, so I'm gonna do some tax harvesting loss on that. But I'll probably save these for next year and then sell them all off, depending on where they're at. As you can see, my Roth is hosted through Fidelity as well as my individual brokerage account, and I just want this brokerage account to be strictly the FZROX, the total U.S. stock market index. If you look at the composition of this fund, you'll find that it's actually only 2,500 companies. It's not like the 3,000 companies that make up, or the 3,500 companies that make up a total U.S. stock market fund. I believe Fidelity removed the small caps from this fund, which is fine for me. It doesn't really make a difference. It still tracks pretty well. The S&P 500 index, and I chose this total U.S. stock market index fund from Fidelity because of the zero cost. There's no minimum balance. You don't need to invest a certain amount of money. Um, so it made sense for me, and I'm not being sponsored by Fidelity or anything like that. I'm just saying that I'm a happy customer. But with the market recovering the way it has recovered, let me quickly go through my purchase history lots, and I'll kind of tell you my mindset on this. So as you can see, I've been purchasing pretty much since January, just dropping money in, dropping money in. Oh, this was the initial investment, $30,000, dropping in, dropping in, dropping in. Then we had the huge crash around March. So I took advantage of those shares, drop, 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 and then we started our recovery sometime in May. And here we are today, in June. So I put in enough money and the market's recovered. I'm pretty happy with where this portfolio is at, or where this holding is at. I want it to get it to $70,000, and then I'm gonna start allocating more money to other different funds. So if you've been following my channel, you know that I'm invested in REITs through M1 Finance. So I want to start increasing those positions. I also invest with Fundrise. I want to increase that position as well. I want to increase more money into my FU fund money. That's FU fund money, not fund money. I can explain that in a whole other video and where I kind of figured it out. But if you want a quick synopsis of it, Simple Path to Wealth by Jim Collins. Great book. He runs a blog. Fantastic. You can Google it, and I'll include a link down below in the description. But so as I was saying, I'm going to be scaling back my investment on this fund, and the reason is because the market has returned back to almost close to normal. It's still pretty volatile. We're still having 5% drops, almost 2% gains, 2% gains, and another couple drops here and there. So I feel that we're in pretty okay shape here. Um, and with the economy reopening and everything else, I just feel like this is probably the best time to start focusing on my other accounts, which is my 401k, the M1 Finance account, Fundrise, FU Money Fund, as well as start probably saving some money for another rental property. And that's really it. I'm gonna just DCA with this fund. If you don't know what DCA is, it's dollar cost averaging. I'm gonna buy when it's high, buy when it's low. I'm just gonna keep buying, and it's just gonna be on a schedule. For my 401k, I'm pretty much almost maxed out for the year in contribution limits. I think it's 19,500, so I'm at about 11,000. So I want to max that out by quarter three, by the end of quarter three. So I'm thinking maybe September timeframe, and then I'll just be able to focus on all the other accounts. These are exciting times. I fully believe in the total U.S. stock market index. Even if we have another 30% drop, I'll probably have to change up my strategy and to take advantage of those cheap shares. But I just wanted to tell everyone, kind of where my mindset is, why I'm scaling back. I'm not scaling back because I'm afraid of stocks or anything like that. It's just now that we're back to almost the same playing field. The market's recovered, the stock market's doing well. Uh, I want to start focusing on my other assets that I have within my overall portfolio, which I'll do a video on later in this month when I sum up my quarter two or my semi-annual, I guess, self and finances. But thanks for watching. Hope you enjoyed it. If you have any input, I'd like to hear you. Comment down below. I also have a post in my blog saying the same thing in case anyone wants to check that out. All right. Appreciate it, guys. Thanks.